Good morning, you mad lads. As promised, you get yet another morning video. For the past 2 morning videos, we have gone in depth to uncover much of the situation surrounding hedge funds and their approach towards markets. On our first video, we talked about some confessions from an ex-market maker, as he disclosed how hedge funds operate and why it is impossible to beat them at their own game. He proposed that the only way that retail has any chance at winning is by buying and holding stocks. The paper hand method is not going to take you anywhere in life. Then, on the second morning video, we went over an interview from Steve Cohen, where we got to see a very angry and bitter man get questioned. As the interview progressed, we got to see Steve Cohen unbecome. His self-defense mechanisms start to fail the more he was pressed, as he became unable to keep up with his lies. He at one point even admitted to being willing to perform insider trading depending on the timing of the event, which funny enough was the most authentic part of the entire interview. He was very confrontational and defensive, but the clever interviewer managed to peel all of those layers of narcissistic mechanisms and got some of the truth out. Today, I want to shift a little bit of the focus from hedge funds and place some much-needed spotlight on the SEC. In today's video, we talked about a concept known as revolving doors, which refers to the constant change in profession from the private sector into public office positions of power. We uncovered the true nature of the current situation, with a previous elected official now working in a top position over at Citadel Securities. But yet, the question still remains, why isn't the government doing enough? The answers to this might be plentiful and vast, and I could not even begin to start explaining each of them. Instead, we are going to take a different approach to this subject, and focus our attention to a singular set of events around the greatest Ponzi scheme of all time. Much of what I am about to talk about comes from a great article from the Rolling Stone magazine, which actually seems to do some very impressive financial journalism. I credit Matt Taibbi's article as a great source of information which helped me put together a lot of stuff. By going over this great horror story that exposes the SEC like never before, we will have insight into why exactly they are so complacent and indifferent with meme stocks. By doing this, we will get a more organic understanding as to how the SEC operates, and the blind spots and restraints it has due to some of their set policies and regulations that actually force them to look away from crime. Today's video is going to be super fun, and perhaps even a little wrinkly. I hope you guys like it, and remember to comment in the end what you thought of it. Before we start, let me quickly disclose that I am not a financial analyst or advisor, and that all contents discussed in this video are provided as opinions. All efforts are placed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Everything presented is evidence I collect, and all opinions are based on research, experience and knowledge on the matter. Shout out to all my donators and pledge supporters on Patreon. You guys are literally my bread and butter. There is not a lot of you, but to the few ones out there, thank you so much. Alright, with all that good stuff out of the way, let us dive deep into the mysteries of the indifference of the SEC and why there is a consistent pattern of regulatory negligence in this agency. The SEC is known for many things, and none of them good. They have built up a bit of a reputation for being slackers, for spending a great deal of time on the hub with their pants down, which I would totally excuse if they actually did their job right. Let's be honest. Stress in those positions must be at all-time highs, and rubbing one out for the sake of that post-nut clarity might actually benefit overall performance and accomplishments. However, these outcomes are never attained, as the SEC is ridden to the core with pure incompetence as well as restraints by laws and lawyers that make it impossible to take a step forward without an overwhelming amount of effort. It could even be said that the SEC's greatest consequence is that of causing endless litigations between lawyers for the sake of court fees, but that's a story for another time. Dysfunction and incompetence could not be more stressed, especially after a 56-year-old whistleblower spilled the beans on what actually takes place. Sticking revelations about the SEC were uncovered, with the whistleblower, a woman named Kathleen Fury, stating she was actually barred by superiors at the firm from bringing cases into court under 2 of the 4 main security laws governing Wall Street. Those are the Investment Advisors Act of 1940 and the Investment Company Act of 1940. As Fury clarified, she and her group of staff for a period stretching more than half a decade, were not able to build up a case against investment managers like Bernie Madoff. This is because she was told directly from her boss, the assistant's regional director at that time, that they do not like having that type of case built. Now, let me explain why exactly it is that the SEC does not like having to deal with certain types of cases. As I said before, There are four main laws that the SEC abides and uses in order to best regulate the financial sector to the best of their ability. They have the Blue Sky Laws, which essentially lay down the requirements for mandating public disclosures of pertinent information to investors in securities. The second is the Securities Exchange Act of 1934, which governs issued securities and actually has laws that bar insider trading. These two laws, for the most part, work as a preventive method against fraud in the securities markets. Then we have the previously mentioned laws, the Investment Advisors Act of 1940 and the Investment Company Act of 1940. These laws are the sword, the weapons by which the SEC has power and legal leverage to be able to enforce and prosecute crimes in the financial sector. They are able to prosecute fraud crimes and malfeasance involving members of the market who manage funds for others. Fury went on to explain that as she rose in the agency after years of working hard, she started experiencing challenges from the SEC higher-ups because they were not approving formal investigations. These approvals are essential in being able to carry forward and bring justice to the markets because they are necessary for the issuance of things like subpoenas. She disclosed the time when she tried to elevate the investigations against ValueLine, which was a high-profile family of mutual funds that were accused of charging bogus commissions. Fury says that was denied from being able to carry forward the investigations against ValueLine directly from the Assistant Regional Director for the SEC at the time because they did not like doing cases where their weapon against the criminals were those two laws we mentioned, the Investment Advisors Act of 1940 and the Investment Company Act of 1940. Upset she that her boss did not give her permission to not enforce two major portions of the SEC regulatory mandate, Fury appealed the decision made by her boss. Fury's complaint cited data and statistics that proved unsettling evidence against the members of the financial world she was investigating. Fury said she approached the SEC Commission 60 times to request file cases or to open formal investigations which were needed for necessary to open those file subpoenas we talked about. Out of those 60 case requests, only one was approved. In fact, the same day that they approved that one case, happened to be the day the SEC Inspector General released a report that addressed the office's apparent mishandling of that precise case. The SEC does not move on big cases until it becomes a public issue. I hope this is ringing bells to you guys about meme stocks. We know that GameStop and the rest are very public, but as I said before, the SEC does not like to spend time investigating cases for companies whose valuation isn't high enough. Funny enough, the Bernie Madoff case was tipped off in extraordinarily detailed fashion by investigators. This was not news to anyone in the SEC, but for months and years they did nothing about it for the same reasons they did not heed to go forward with those 60 cases Fury requested information investigations be started. In the year 2009, Congress went full ham on the SEC for their lack of complete total output in prosecuting criminal cases. Funny enough, the SEC started opening cases and investigations in regards to the infamous laws, the Investment Advisors Act of 1940 and the Investment Company Act of 1940, which as we mentioned, are the ones the SEC hates the most for some odd reason that I still can wrap my head around. A lot of things happened afterwards, but nothing good followed Fury's career. This is important to note, because as I will explain in a minute, what followed after all her attempts is an incredibly sad tale in America that keeps happening over and over again. Fury's superiors did not like that she had whistleblowed a lot of the stories and overall attitude of her superiors. She was shunned by superiors, and kept away from certain type of sensitive work, as well as taken off the promotion track. When she asked director of the NYRO if she was being held back in her career for her whistleblowing, he said that there were people at the New York office that were not fans of what she had done. This same director went on to get a top position at the SEC, becoming and running the Sex Enforcement Division, funny enough. What followed Fury gets worse. Fury stated that she was being compensated at a level not commensurate with her duties, being paid at a level of that of a level civil assistance while performing duties at 2 levels above her paid level. When she brought this up to her bosses and other officials, nobody responded to her. She then requested a desk audit, which is a procedure in which an outside official looks at the situation and assesses the duties of an agency employee. She went on to receive a perfect score of 1,760 out of 1,760 in this audit, and was told that she remained in that position, she had to be promoted. The SEC and some other officials then stripped her of many of her duties, demoted her and ignored the recommendation of the desk audit. In fact, this was such an awkward response to all the events that Human Resources had to do research to see if it was even legal at all. The SEC responded with some poor excuse that can be summarized as she was only performing duties above her grade temporarily and that upon replacement of that position she was doing the job for, she had to be demoted immediately. Fury went and moved on with her life to better and brighter things, but this spells some ugly truths about the SEC. First, they are not interested in doing their job. They will also go to punish individuals who push to try to get the SEC to perform. It spells a cautionary tale for people everywhere that being effective at your job will not be rewarded, but instead punished. Why the SEC doesn't perform their duties is a mystery, but I would say the concept of revolving doors to be a big factor playing into this. Conflicts of interests between people switching back and forth between the private and public sector cannot be good for an agency trying to regulate laws when the private sector is intent on bypassing them for profits. They will go after you and your career. This has not stopped everyone though, as many people have come forward and pressed the SEC to pursue important cases. The SEC will drag its feet as long as they can in types of cases that revolve around the laws of Investment Advisors Act of 1940 and the Investment Company Act of 1940. They will go after people, even their own employees. One time they went after a man named Gary Aguirre, who famously won a $755,000 wrongful termination settlement after he was fired for trying to press an insider trading case against Morgan Stanley chief John Mack. Funny enough, this guy, Aguirre, now represents Fury. Fury is a champion of light, and her character and moral fortitude should be applauded. She serves as a symbol of doing what's right, even if the consequences will destroy your career. She tried endlessly to bring cases to formal investigations, and the SEC denied almost all of them, only a handful going through after decades of hopelessly trying. She then became a whistleblower, trying to get attention to this, and she was punished for it. She held strong, like an ape, and I am delighted that people like her still exist. I know there are good people being pressed under a boot at the SEC. The SEC has a serious problem of conflict of interests, and they cannot fully function so long as the law remains blind to the concept of revolving doors. Thank you for sticking to the end. I hope this little morning series were fun for you. Let me know if you would like for me to keep doing them. If I do, they will not happen every single week and day, because this takes so long to do and research and edit that I will never get enough sleep. However, I can plan these out ahead of time and release videos like we did this week from a Wednesday all the way to a Friday. Let me know what you think. Also, do comment and let me know what you think of the topic we discussed today. It was a lot, and I hope it brought you some much needed perspective as to why the SEC doesn't do anything. Did you find the video well written and comprehensive? Was it easy to understand? Let me know everything. This one took forever to make and research, so I hope it pays off in you guys getting some insight into the situation at hand. If you want to help this channel, I have provided links which will be in the description for donations and a Patreon if you would like to pledge a monthly donation of any kind. This goes a long way in helping me be able to pump videos out, as I have quit my job and abandoned other activities to do this full time to keep you guys informed by making these videos all by myself. Remember to follow me on Twitter if you haven't already, and I hope to see you guys on the next one later today. To the moon.